Dave, thank you. My first time here. My business partner Vince has done many of these sessions with you, and thank you so much for having me on. As I mentioned, we're going to be spending most of our time on this screen here. The plan was to actually do this presentation, pardon me, on Metastock, but I recently got a new PC and just had a little bit of trouble transitioning the account over. So Jeff said he'd help me with that after the session. As Dave mentioned, my name is Rahul Arora. I'm the developer of this new system called a velocity system. If you're familiar with trading winds, you know Vince quite well, and we've designed a few different systems in the past called the winning momentum strategy. One's called victory, one's called veracity. The most recent one, of course, is victory. There's a new version of that coming out shortly. Velocity was a system that I've designed over the last 2 years or so. Before we do any of that, Dave, I know mentioned it before, or in between each speaker he mentions it, but just a good reminder that what we're doing here is sort of a class on technical analysis. This is not financial advice, because your risk tolerance is different than mine, different than Dave's. Make sure you consult with the people that know your situation better than anybody on the internet could before you make any decisions. As I mentioned, I created the velocity system. I've been trading independently since the year 2000. Prior to that, I was a CPA and really enjoyed that. I was an auditor in the accounting firm, and I really got a chance to learn a lot about the fundamentals of companies and what makes companies tick, what makes companies successful, what makes companies profitable. And from there, you kind of go into, it's a natural transition to then look at investing and say, I've got a little bit of the knowledge and the fundamentals. Now I add a little bit of technicals to it. Okay, do I have something here? And since 2012, Vince and I have been sharing our methodology online. And as I mentioned, we've developed a few different systems, and this is the most recent one that we have here. If you've been trading for any amount of time, and if you've been trading over the last couple of months, you know that you could be in a position, feel really great about it, and then you wake up the next morning and there's a tweet or a message on Truth Social, and all of a sudden your position isn't looking as good. I personally have had that experience. If you haven't, then I would say you've been lucky. On the other hand, a lot of these things can go in your favor. Intel is a perfect example recently, where Intel drifting downward, AMD, its competitor, skyrocketing. And then the news comes out that the government maybe wants to take a bit of a position in Intel. Then SoftBank comes out and they want to take a position in Intel, and Intel stock, of course, you've been seeing what it's been doing. So the market calls for not only caution, but I think you need not only a great strategy to enter, but I think you need a great strategy to maintain your trade, and I think you need an even better strategy to determine when you want to get out, when you want to scale, and when you want to look at a position that maybe is getting weak and it's running out of that acceleration that we look for as options traders, and maybe consider a different position. We're going to talk about all of those things in the next 36 minutes or so today. This is not anything new. You know that trading blind is costing you. And when I first started trading, and it was around the year 2000 or 98, we were at the accounting firm. There was nothing for us juniors to do at the time. We're waiting for work to come in. And you remember there was a little consequential tech boom happening at the time. So we'd sit around, wait for eBay earnings at 4:15 Eastern, have our money on call options, which of course would get blown right up because we had no idea what gamma, theta, delta, any of those things meant. We had no idea what a vol crush was. This is, I think Netscape may have been the dominant browser at the time. Maybe it was Internet Explorer. So we didn't really know this stuff. We just thought, oh my God, it's options. How can you not make money? Well, there's a lot of ways you can not make money with options, and we found most of them. So I said there's got to be a better way. I want to really give this kind of an academic a look, and I want to see what we did wrong, what we could be doing differently, and where we can maybe put the odds in our favor. I did all these things. Chased entries. So you see a stock gap up, oh, it's going to continue going up. What happens the next day? Owners of that stock are very happy to sell it to you at the top. And of course, you miss out on the real moves. Started using indicators that I thought were great, simple moving averages, or basic stuff that without any kind of context would give you false signals. So I said, okay, let's see if we combine a few things. Can we combine some fundamentals? Can we combine that with technicals? And can we combine that with timing to see if we can increase the odds? And really treat this like a business, and a business where it's similar to what a card counter does in blackjack. They have a very, very small edge, but that small edge applied consistently will end in success. So let's start with the headline first. This has been our performance throughout the year. So this has been all documented through our Microsoft Teams channel, and we'll show you how to get access to that as well. So this was all documented through our Microsoft Teams channel, or during our nightly videos, or during our Monday, Wednesday, Friday weekly chats. And how did we get here? That's what we're going to talk about today. So here are our trades: Corsair, SLV, QQQ5, that's a 5x leveraged product that trades on the London Stock Exchange. Mag 7 also trades on the London Stock Exchange. HIMS, we caught that momentum. Affirm, we caught that momentum. Pardon me. VIX was one I got to admit we did get lucky on. We bought this on a Friday. It was kind of a throwaway at 35 cents, and we had the gap up, and I'm going to show you where exactly that happened. And we closed it out on the following Monday for $1.85. But you can see we're going across the spectrum here, from tech to volatility to meme stocks to metals to banking to gambling. We're not really that interested in what sector is hot right now. I shouldn't say that. We're somewhat interested, but we are more interested in what the individual stock looks like. Now, it's important that we have a tailwind, and it does help. So if the market is drifting up, we're going to be more likely looking for long positions rather than short positions. And you can see most of these positions, and the market, other than that blip in April, has gone up. If we look at it from the beginning of the year to now, it hasn't gone up that much, but you catch these momentum plays, and we show you exactly how to do that. There's a perfect example of a momentum play. This was open. Starbucks, we had a pretty complex option combo on that broke about even. We did, these are scale outs on DraftKings. Here's one that we have open on Abbott currently, so I'll show you how we got into that. IREN is in the green energy space. So that seems like a sector that might be hot. So let's go back to how we got into these trades. So I want to show you, do we have anything else to discuss here? Lagging indicators, okay, there's the offer, fine. All right, so let me start with a chart of the Qs. And if you have any questions, or if you have symbols that you would like me to review, please, I encourage you, put them in the chat. I'm very, very happy to look at them for you. So as I mentioned, on the Qs here, what I wanted to really talk about was support and resistance and how we can apply it. So you can see on the velocity system, we plot these longs and shorts for you. It's the same on, I'm using Trading View here. It's the same on Metastock as well. So you'll see the same longs and shorts. And the only thing different here on Trading View is there is a ribbon that sort of guides you along the way. On Metastock, we have price targets along the way as well. So two little differences there. Let's go to this area here. This is the 8th of May, the 9th of May. We get this move that comes above the ribbon. You can see we get this one move up. We don't get along on this one, but we get along on this one. So now I want to zoom in here and I want to show you what I'm talking about with support and resistance. When we get this long signal here on the Qs, I want to see a break of a previous pivot high. So there's our previous pivot high. And depending on your risk tolerance, and my risk tolerance is low, considering the age that I'm at, my personal situation, and if you know anything about accountants, you know that they're generally afraid of their own shadows when it comes to taking on risk. And we find every way possible, just like engineers, and I love you engineers, we find every way possible that something can go wrong, and we sometimes maybe miss all the things that can go right. So the reason I drew this line here is I want to see a break of a previous high above the ribbon in the same direction as the trade that I'm taking. Okay, I'll say that again. I want to see a previous high broken above the ribbon in the same direction of the trade that I'm taking. So if I compress the chart a little bit here, and you can do this with a line chart if you're not comfortable reading pivot highs and lows, but let's go through it quickly. There's one there, there's one there. This is a little wonky one, so maybe we don't count this one. But this one here is not above the ribbon. This one here is above the ribbon, and I want to see a break of this high before I enter the trade. Okay, now let's go back to that VIX call that we had. So this is May 12th, and if we go to that VIX call here, it was May 9th. So that was the one where we bought on the Friday and we ended up selling on the Monday because of this gap here. How do I structure this trade? My preference, again, going back to the risk tolerance situation, or the risk tolerance context, is I want, when I'm trading options, and that is my preference, especially for an issue that's $500 plus, I want to trade options so I can get a little bit of leverage. But at the same time, I'm not just buying a straight call, because the one thing that, if you've been trading options for any amount of time, you know, is that speed is the most difficult factor to gauge. We can get direction right, and in this case, we got direction right. So there's that entry at 507. But before I show you what happens to on the right side of the chart here, you can see we go up, we come right back down to where we got in. We go up a little bit, we come right down. But if you now we look at the right side of the chart, you can see that this was a fantastic trade if you had structured it correctly. If you're just buying weekly expiry options, you're going to lose here, you're going to lose here, you're going to lose here. So my general preference, my default, again, there's no one option strategy that is a perfect fit for every situation. My preference generally is a simple call debit spread. That's my bread and butter, because I want a little bit of theta working with me, not against me. So when we look at a live trade or an actual trade that played out, I'm going to show you why it's very, very difficult to recover on a straight call, especially if it's short dated, when you get something like this happen, that happens. Even if you had a 60-day to expiry call that you started here, by the time you get here, because of this downward movement, you're going to have a very, very difficult time making a lot of money on it. Now, you'll do okay, but if you had that, if you set up a position with a spread here, your short call would likely end up making you quite a bit of money here. And then when the recovery happens, because your long is going to be that much closer to being in the money, you're going to make more money on a percentage basis on this move up. Okay, as I said, there's no one perfect strategy for every situation. Recently, I've been playing around with reverse diagonals and reverse calendars, and I'll show you one of those before we sign off today. And that strategy has worked quite well. So the basics of support and resistance for me, let's go back and let's look at a short here. There's our short that gets signaled on the 11th of March. And we have not broken a previous low. Okay. We go back, we test the bottom of the ribbon, and now we've established a pivot low here. If I draw this trend line across and keep it straight, which is the most challenging part of trading, in my opinion, is keeping that trend line straight. You can see we break that low here. Now we close above. You could read this bar and say, you know what? Yes, there was momentum to the downside, but we closed on the top end of the bar. I don't want to take this trade just yet. Fine. You can do that. Again, risk tolerance. And in this case, you would have missed out on a good trade. Had you started here at 470, you can see 3 days later, this kind of falls off the table. Of course, that old adage of when the market is up, it's stair steps, but when the market comes down, it's an elevator. And in this case, that's exactly what happened. This was Liberation Day follow through, Liberation Day recovery, again, drifting. And then of course the news comes out that, well, you know, the tariffs, maybe we overreacted. Let's see if we can do things to make you happy. And then of course we get this move up. Now we want to confirm that this is a legitimate move up, and that's why the system that we've designed tries to avoid this noise here and only gets signals where we think that we've overcome most of the resistance and we do have some kind of support along the way. If I look at a SPY, same kind of thing. You can see the entry comes the same day, May 13th. Now, the way I structure my entries, again, the way I structure them with my risk tolerance is the following. When I get the entry, and again, let's draw that trend line. So there's the entry about there. Am I comfortable on ETFs to take a risk that's 5% from where I started, a maximum of 5%? On stocks, it's 10%. Again, very, very personal. A lot of you may be much more risk tolerant, and on something like HIMS or on Open Door or any of these stocks that fly, Tesla, you may want to increase that risk tolerance to 15% to give yourself a chance to stay in the trade so that you don't get shaken out. But I found that for me, the 5% rule for ETFs and 10% rule for stocks gives me enough of a buffer so that I don't get shaken out of a trade, for example, here. And you know, you see this all the time with new traders. Well, what if I just take this trade and I close it anytime it closes below the low of the bar where I took the trade? Great. You know how often this is going to happen? Especially if you're trading on a shorter time frame, like a 5-minute, 10-minute, 15-minute, and you're going to get chopped around and you're going to say the market is against me. I can't make any money. And you can't, because you've got to give the trade a chance to breathe. So my entry here at 586, or the options entry, whatever that was, maybe it's a 590, 620 call debit spread, maybe it's a 550 in the money, 650 out of the money, reverse calendar. But I don't want to be in this trade if it comes down more than 5% from this level here. So 5%, let's just assume that this is 600, so 5% would be 30. And the bottom of my ribbon is 560. So for me, this trade is a go. Okay. And you can see it comes back, test your patience a little bit, but then keeps going. The one thing that we've added recently is an ATR trailing stop. And on TradingView, there's someone's already been kind enough to program it. This is a 22 period look back and a 2.5 times the ATR. You can set it to whatever the default. If you load this on, is 3. 2.5 for me, again, comfort level. And it's about elements, your comfort level, your risk tolerance, your position in terms of how much you can deploy in capital, etc. All very personal to you. But for me, 2.5 times the ATR is just enough. So it allows me to stay in the trade. So here's my entry at 586. And in this case, you can see that 2.5 ATR and the bottom of the ribbon coincide. So for me, I'm very confident in this stop here at 5% or at 558. So we come back down. Do we get close? Not really. We get to 575. We move up, and then I would draw another trend line here to establish a new pivot high. Pardon me. Okay. We come back here. We close below it, but then we take right off. And you can see we trail it nicely with that ATR stop. And the first time, you all remember this if you've been trading recently, that Friday, this bar here, we closed below. So even if you had done nothing and did not roll out a single option position, did not scale out of any shares, if you had gotten in here at 5, let's see what the close is. And generally I'll go by the close because this is a daily chart. You can certainly apply this to a 5-minute, 15-minute, hourly, 4-hour. I wouldn't do weekly with this. Weekly is just, there's just too much. When a stop happens, it's just too much of a gap for me. So my comfort level, daily. So you get in here at a close of 586.84, and if you had done nothing except just follow the ATR, you'd be out at a close of 621. So from 584 to 621, from May to early August, you're kind of sitting in this trade. There's nothing to worry about. You get this close. Again, if you have a little bit more risk tolerance, you can say, you know what, I want to see if it will break the top of the ribbon. I want to see if it'll break the bottom of the ribbon. For me, that's just too many factors that I don't want to concern myself with. I want to make this as mechanical as possible. I don't want to have any emotions in this. I want to see a line. I want to trade that line. If it breaks that line, I'm out of the trade. That's it. That is as simple as I want to make it. And if you look at IWM, which again showed up on our trade analysis here. So there's velocity, there's the IWM trade on June 10th. Pardon me. And there's the IWM trade. We took it the next day. And you can see, in this case, I cheated a little bit. I convinced myself that this was a previous pivot high above the ribbon. It's barely above the ribbon. But I liked the fundamentals behind the small caps. I liked the idea that we were in for rate cuts, which would factor the small caps. I liked the idea that at some point there was going to be some rotation from the mega caps into the small caps. And if we go back and review what happened earlier, we got the signal short on the small caps almost a month before we got the signal short on the mega caps. So here's our signal here. Again, do we break a previous pivot low? We do at this point here. Let me draw it in for you. It looks like my charts have completely frozen. I'm going to take a drink. There we go. Okay, so there's our trend line there. We break the low here. We break it here, but we close above. Let's assume that we want to take it on a break and close. Break and close here at 212.39. So at 212.39, you get down to a low of 197. If you're using the 2.5 times the ATR, you'd be out here for a small profit. Now, I'll show you what happens if, again, you want to give yourself a little bit more room to work with, and you put this up to a 3. Okay, you can see that you get close to an exit, but you never actually hit the exit. and you get down here and your close finally comes. So if we go back and we look at our short and look at the short entry here at 212.39, again, if you had done nothing, you don't want to think about exits, you just want to make this as mechanical as possible. You want to have as little decision making to do along the way. Here's your exit at 193. Okay, so from 212 to 193, and again, you're just following the mechanics of the chart. You're not making any decisions along the way. Now, you could potentially, our entry, again, we want this entry here where we know we've overcome all the resistance that we have along the way. If you're using a simple ATR trend change, you certainly could take this here, but a lot of these will fail. And if I go to something like Pfizer, you can see there's one there. Okay, that happens on earnings. They usually report, yeah, so it's a morning. So this is on the day of earnings. We go up a little bit, but then we come right back down. Okay. This case here, it's the same. Pfizer has been a tough stock to trade, but here's why I like Pfizer today. I want to see it, ideally, I'd like to see it break this high here. And the reason I like Pfizer today is because the healthcare sector has generally been beaten up pretty well, but it is starting to show some strength. And Pfizer is one of the big names in that healthcare sector, as is Lilly, Merck, etc. And Pfizer has just been so beaten down. The stock is likely undervalued from a fundamental perspective. And that is something that I look at. So I will look at, if I had to apportion percentages to my analysis, I would say 50% technical, 60% technical, 20 to 25% fundamental, and then the last 15% I will look at momentum, and I will look at any kind of unusual options activity to see if there's anything there that supports my thesis. So the start is here, the fundamentals are second, and then I look at any kind of momentum and unusual options. Okay, so this is a long on Pfizer today. Let's see if it actually holds. By the end of the day, it may not. So it will give you signals throughout the day, and that throughout the day they can change, but once the bar closes, the signals don't change and they stay on that chart. So you can go back, and here's a short here. Now, this is a key area to look at. I'm just going to take this off for a moment just to clean the chart up a bit. Okay. And I'm glad we're looking at Pfizer because I want to show you this area here and our idea of support and resistance. So if I'm risk averse, as I am, when I get this entry here, do I have a break of a previous pivot high above the ribbon? I do not, so I don't take this trade. In this case here, do I have a break below? I do not, so I don't take this trade. In this case here, we now have a new established pivot high. Now you could cheat, you could say this could be it, but let's say this is the one, or even if this is the one, do I take this trade? No, because we never break that previous pivot high. We get the short signal. Now this one is a little bit more challenging. So this one, our previous pivot high comes in right there, okay? I'll move it up a little bit. And I could get tempted and I could cheat and I'll say it's close enough and I could take this trade here, but as soon as I get this reversal bar that happens, I would be out of that trade. So this is treated a little bit differently than waiting for a close above the ribbon. In this case, everything else lines up. It's a $28 stock, approximately. Your stop is at $29.50. It's well within the 10% range that we look at. This is not, you can see this is not a long, but this is. So do I take this one? No, because it hasn't broken that previous pivot high. This one here, I'm sorry, we just looked at this one here. Now this one gets more interesting. This is a short. We don't take this here. Okay, we wait for a break of a previous pivot low, which if I stretch this out and straighten it up a bit, okay, let's say, and if we zoom in a little bit, that is our trade here. Does everything else align? 28.10. We want to be no further than $2.80. So 28.10, 29.38, pardon me, 29.34. Yes. So this, to me, is a trade that I would take. Earnings are out of the way. I generally do not like to sit through earnings unless there's a reason to, and I'll show you why there could be a reason to sit through earnings, especially if you have a situation where you've taken profits along the way and the trade is on house money, or you've rolled your options a few times and a significant move back is not going to hurt you. But if we zoom in, this is our trade right here, okay, at 28.09, and you can see we kind of go for a ride here, and November 15th we hit a low of $24. So on Pfizer, it's a pretty significant move from approximately 28 to 24.50. Options on Pfizer are cheap and cheerful. So when you get a move like this, you're going to make money. Now, if we put on our trailing stop, you can see how we would have treated this. Okay, so there's our entry there. And we get as low as here. We never close above the ATR until 26.77, but still a winning trade, even if you had done nothing except just follow your trailing stop. Okay, so you can see the system is designed, and you combine the support and resistance, add to it to determine whether you want to be in this chop zone, and you can actually stay out of this chop zone. You are going to have losing trades. I'm not going to lie to you. We did have one in this year, and that losing trade was on. It was on CMG. CMG, we got into the trade on June 30th, and we were out the next day. I'm sorry, we took profits on that first. So CMG, we did take our first set of profits at 36%, and then we closed out the trade on a move below our stop at 40%. So this was barely a loss. The net was about 4% to the downside here. So if you look through this spreadsheet, and the spreadsheet is open for everybody. If you'd like access to it, just send us an email to info@tradingwins.com, and we'll send you a copy of the spreadsheet. And you can follow along if you would like. We want to be as transparent as possible. That's why I started with this and then worked our way back to how we got here. And how we got here was through a very simple strategy of looking for longs, confirming those longs with support and resistance, looking at some fundamentals, looking to see if there's any unusual options activity. The thing I find about unusual options activity, I know it's a hot topic. The thing I find with that is there is a significant undertone of survivorship bias. You only see people talking about the trades that work. Oh, look at this. You know, this was somebody bought Oracle before earnings, and look what happened to Oracle. Yeah. What about the 1,000 other people that bought puts on Oracle at the same time? You don't hear about those. So be careful. That's why, for me, it's a small part of my analysis, but I would still say it's a somewhat important part. If I'm reading, and I've gotten pretty good at reading how that activity actually goes, if it supports my thesis, that's another check mark on that trade for me. So here is Oracle here. So Oracle, again, do we break a previous pivot high above the ribbon? No, we don't. It's over here at 181. The entry comes here at 160. Now, I could say, you know what, I'm kind of liking it here. My stop loss, it's not even close to being 10% away. From 162 down to 148, it's $14. I shouldn't say it's not even close. It's within my risk tolerance. So yeah, I'm going to take this trade. And of course, you see this. As soon as you get into the trade, you see this, but you've given the trade enough room to breathe. What I could say is, okay, I not only have my support level at the ribbon, the bottom end of the ribbon, but I also now have an ATR level that's supporting me as well. So that could be justified as a trade here. But for me personally, the trade is here. It's on the 28th of May. And I was saying to you earlier, why would I ever want to stay in earnings? The reason I would want to consider staying in earnings here, and even if you didn't stay in earnings here, but you got in here at 164 and you were out the day before earnings, you'd still be at 177. Okay, so great profit in looks like about 10 or 12 trading days. The reason I would want to stay in earnings is when I get a trend where we look like we've bottomed here, and then we're going into earnings, and it looks like that. That to me is reason to at least consider some kind of position going into earnings. Now, it doesn't always work. Nothing is 100%, and this is a gamble, and we want to keep the gambling to a minimum. But sometimes these things can pay off, and again, depending on how your position has performed from the time you got in, this may be a free shot at an earnings gap for you, or it may be a small cost for a big payoff here. And you can see this earnings gap here at 200. And if you had this 3x the ATR, you can see it kind of supports it along the way. Stair steps up. Remember, we talked about when it goes up, perfect little stair steps up. Now, yesterday's bar, a little concerning, but you saw this on a lot of names yesterday. Palantir, of course, being the most prominent with its run up. So in terms of where we are with the overall market, it's watchful waiting. I want to see what happens. I'm not opening any new long positions of any significant size until I can make myself happy that we're back in an uptrend. Now, the bar today is looking very impressive. That move back from the lows. All right, I've got 3 minutes. Let me go back here. If you want to join us and be a part of this, we would love to have you. The group is a very mature, almost academic type of group with hundreds of years of trading knowledge. We meet with our group Monday, Wednesday, Friday. There are people that specialize in all kinds of things like sector rotation, options, short-term strategies, retirement strategies, etc. And these are the members that have been with us for years and years. If you'd like to join us, you get access to all of this stuff, including the Monday, Wednesday, Friday sessions. You get nightly video sent from us. You get that private Teams group that alerts you on trade ideas that we're looking at. And of course, we have that trade tracking spreadsheet as well. Dave, thank you so much for letting me be here today. It's tradingwins.com/start.